CMT Digital is a global blockchain and Web3 VC firm. And so I'm curious to get your firsthand observations on the space. According to DeFi Llama data, venture capital funds invested $634 million in crypto startups in July. That's up 15% from the month before. Now, last month, PitchBook released its Q2 crypto report, revealing that deal count dropped in the quarter, but the total deal value ticked up to $2.7 billion, which pretty much shows that on a deal-by-deal basis, check sizes were larger. However, PitchBook's Q1 report showed an increase in both deal value and deal count. So what do those Q2 results signal to you, and what are you noticing in terms of VC investments right now?
Yeah, absolutely. I mean, I'll step back and say that we're a generalist investment firm in the blockchain and digital asset space. We like to be early to investments. We like to invest before categories are named. And I think what we're seeing a lot of right now is because of the maturation of the technology stack in the blockchain and digital asset space, there are just an abundance of new use cases for this technology coming online. And there's growth behind these use cases that's being fueled. And so that's why you may see larger checks going to fuel growth as opposed to a new idea at inception. And that's very exciting and very affirming for the space.
So where is VC capital going right now? What crypto projects are getting the most attention? PitchBook crypto analyst Robert Lay told me infrastructure deals continue to get a significant amount of the money, including layer 1 and layer 2 scaling solutions. He said applications haven't been gaining that much traction as of yet, but PitchBook expects applications to be the next wave of investments that will come within the next 12 to 18 months. Do you agree? And are you seeing the same thing?
I would agree with that. I think that for the first time, I feel confident saying that the infrastructure stack, now there will always be upgrades to be had in infrastructure, and we see this in Web 2 software. This trend will repeat, and there will always be marginal improvements to be made. But I think we're at a place where you can build real kind of feature parity applications to Web 2 on the Web 3 stack. And that's extremely exciting for what the future holds. For us, we're not so much looking at the next layer 1 blockchain. We will look at a net new blockchain if that blockchain presents a net new use case. So, something like permanent storage, as opposed to a smart contract blockchain, say in the 2017 era, would have been something that we look at. Something, today that we're looking at are things in the DePIN sectors. So using blockchains as a mechanism to coordinate the deployment of physical hardware at scale, and really aiming to collapse the cost of some of these base level services that we take for granted, such as cellular or really Wi-Fi. That's an area that's got us extremely excited. I think that we're going to see the same thing in payments, and we are seeing that. There are trillions of dollars settled in stablecoin payments yearly, and you see some of the largest companies in the world really starting to embrace this technology. I think the most telling is perhaps PayPal, where the company was really founded in the early days with the thesis that they wanted to be the internet payments company, and that was a novel and revolutionary idea at the time. You now see them embracing and eclipsing $1 billion in PYUSD minted, and really leaning into the benefits that blockchain technology has to offer, the composability within decentralized finance. That's extremely exciting. So that's a household name that is leaning into the space. But there are tons of companies that we look at building in and around the payment space on a daily basis as well. And that's what's got us excited, really speaking to the incredibly talented mind share that is flowing into the space today.
So for some background for our viewers, CMT Digital invested in more than 150 blockchain and crypto-focused businesses, protocols, and tokens since 2018 when the firm made its first venture investment. Your investors in companies including Circle, Coinbase, and Consensus. And touching on what you just said, what crypto investments are you focused on right now specifically? What is CMT Digital looking at?
Yeah, absolutely. Yeah, so as you had mentioned, Talia, we're fortunate to have raised our first fund in 2018. Since then, we've raised two subsequent funds, and we're in the midst of raising our fourth fund. We've had the opportunity to partner with incredible thinkers and builders, people that are really pushing the envelope. Today, yeah, I would say where I spend most of my time is in the decentralized physical infrastructure space. So how do you coordinate the deployment of physical infrastructure via crypto economic incentives? How do you create a protocol by which I can deploy, for example, a helium hotspot in my home and provide coverage and provably provide coverage and be rewarded via a decentralized mechanism for the provision of that coverage? I think that's an incredibly exciting design space. Both on the application specific hardware, so a tailored device like a helium mobile hotspot, but also the longer tail of kind of underutilized, call it storage space or bandwidth on any given device, like the computer that I'm talking to you from right now. I also think there's another vein of this kind of proof of work mechanism called proof of useful work, whereby the computation involved in reaching a consensus on a blockchain network is actually useful in a derivative function. So think about testing algorithmic innovation, and if you reach a breakthrough there, you are not only bringing consensus to a network, but you're also advancing a field of computation. That's been quite interesting to us. I think this transformation of finance is happening. I mentioned at the beginning of the call, this is the most exciting time that I've ever invested in the blockchain and digital asset space. I think one of the reasons that's really fueling that excitement is you see this genuine embrace from the top down of this technology. It'd be hard to go through a call without mentioning BlackRock and their movement in the space in 2024. I think the most telling statement that Larry Fink has made is that he considers the tokenization of assets to be on par with the creation of ETFs and the ETF wrappers. And he believes that all financial assets will be tokenized. We believe that as well. We've started out with a virtual representation of the dollar that has amassed billions, hundreds of billions, I think close to 160 billion in market cap from stable coins at this point. And they're settling, again, trillions of dollars of value globally. I think as that starts to, the efficiencies recognized by a unified ledger start to creep into traditional finance, we're quickly going to see a world where the marginal dollar invested in a corporate bond or another type of security is coming from the blockchain and digital asset space, or at least on those rails.
As you mentioned, CMT Digital has 3 funds to date and is currently in its 4th fund, targeting $150 million. As you're raising for the 4th fund and are in conversations with limited partners, you note that ETFs represent a, quote, bullish signal to invest in crypto funds, and that the products present the perfect opportunity to get retail and institutional investors looped into crypto. Can you elaborate on that? How do you think the approval and launch of spot crypto ETFs here in the US changed investor appetite?
Yeah, I think that this is a major stamp of legitimization for the blockchain and digital assets space. I think that once you fall down the rabbit hole of Bitcoin and subsequently Ethereum and Solana and fall into the crypto world, you see people enter the top of the funnel. They don't really come back out, and so I think you've created a massive sinkhole, not just for dollars, but for mind share, for people to pay attention to this asset class and the true innovation that's happening inside of it. And so these are perhaps the gateways for completely new pools of capital to enter. At the same time, you have these massive financial institutions that are offering the ETFs, actively investing in the base technology itself, not just in the wrapper for Bitcoin or at this point Ethereum exposure, but how do we apply this technology, this revolutionary technology, to our legacy business? And upgrade, to a financial system for the 21st century.
Now, I recently put together a report on the merging of two popular technologies, crypto and AI. And on Friday, Coinbase announced the platform witnessed its first crypto transaction between AI agents. According to Architect Partners, AI is pulling some investment dollars away from other technologies, including blockchain. Data sent to us from the crypto advisory firm shows that in Q2 of this year, AI private investments totaled more than $40 billion, far surpassing crypto investments. Are you also noticing that AI is taking VC dollars away from blockchain investments?
Where I focus, so I use AI tools in my daily processes, and everybody at our firm does now, and we're actively automating several of our processes. And it's impossible not to pay attention to the change that's happening around us. As far as dollars being pulled from the blockchain investment space into the AI space, I think the most prominent trend that I'm noticing is actually a proposition to use blockchain rails to potentially control or be the payment rails for an AI to AI transaction, like Coinbase released a press release on this. I think that's very, very promising. These large language models are non-deterministic. You can get two different results by asking the same question. How do you monitor for integrity, consistency, and then especially when you introduce flows of value, how do you check that a task actually was completed, and the automatic release of funds can then be kind of provisioned. I think that there are the perfect rails for that are blockchain rails, and so we're actively looking at. And then also, I think in its simplest form, blockchains are an encapsulation of internet data into an ownership, an asset that is ownable in a self-sovereign or individual fashion. And when you think about one of the main inputs for large language models, it's these large swaths of internet data that are originally created by us, by the people that use the internet, and so rewarding users for their internet data is something that's extremely interesting to me. I think we're seeing incredible innovation in the zk-TLS space and other kind of data pipelines that allow us to create a real substrate by which you can be rewarded for sharing your internet data, which is clearly valuable. So I think the marriage of these two spaces will be very interesting, and I think it plays very well into what crypto is extremely good at, what blockchain mechanisms are extremely good at.
Before I let you go, what's your outlook for VC funding? PitchBook, in its Q2 report, reported the third straight quarterly bump. Do you think the streak of quarterly bumps in investment values will continue into the next quarter, especially now that we're seeing Bitcoin trade well below its record of more than $73,000 reached back in March? How do you think crypto's performance this quarter will play into investor interest, especially with that big sell-off we saw in the beginning of last month, if at all?
Yeah, I think that over the summer, crypto is largely traded as a as one kind of unified asset. There's not much kind of differentiation. Maybe the Ethereum and Solana all have, kind of like a high correlation to Bitcoin. And really it's kind of determined by the macro whims, and you see, when everything kind of correlates to one with the carry trade unwind. And so, I think that we are going to see in the 12 months to come a large kind of disentanglement of the narratives, and individual narratives in the blockchain and digital asset space really take a hold. I'd mentioned a bunch of them earlier, but payments and DePIN are the spaces where I'm spending a ton of my time, and those are so different from the value proposition that Bitcoin offers. And so I think that as we say at CMT Digital that blockchain technology is an everything technology. It can affect almost every asset class and every industry. And we think that we'll see this disentanglement in the months to come, and some really interesting narratives pop out from that disentanglement.
And we'll see if your outlook comes to fruition. Sam Hallene, investment partner at CMT Digital, thank you very much for your comprehensive insight and your time today.
Thanks so much, Talia.